two questions, actually. First off, although we've got used to thinking of the sovereign debt crisis as a European crisis, as you and I were discussing over lunch, state and local governments in the US have their own very serious debt crisis, and I know you've got thoughts on that, and in particular, whether they're being taken seriously enough. But what I think all the gentlemen on the panel really want to hear from you about, Meredith, is whether you think the banking industry is full of wise men or not.
Smartness comes in a lot of different varieties, right? With respect to the U.S., what is so interesting in terms of the comparison with Europe is that Europe has a timetable only when the market tells it has a timetable. The U.S. has a timetable as of this week. So 49 states are constitutionally required to have balanced budgets, and 48-plus states have massive imbalances. So what that means is you're going to have austerity measures taken just at the time when the government traditionally uses hiring and spending to fuel the economy out of a crisis or a downturn. And I think that has very underappreciated implications and will have very serious consequences to the extent that state and local governments employ 20 million Americans, or 15% of the U.S. working class. Now, to say whether this is appreciated, the rating agencies have not reassessed some of the states in a decade. And so when we talk to the rating agencies about are they worried about this, they say, well, and even some of the top firms covering this market, municipalities don't go broke. I mean, after all, they haven't in 20-odd years.
So are you
seeing housing couldn't go down on a national basis because it hasn't since the Great Depression.
Seeing the same behavior of rating agencies in relation to muni debt as you memorably saw when people were doing crazy derivatives 4 or 5 years ago?
Without a doubt. And then if you look at the investor base of muni debt, it's the largest investor base is you and me, households. And then you go to the second largest investor base, which is insurance companies. And households think, it's AAA rated. All of this sounds so reminiscent of buying a AAA rated mortgage-backed security. And so the complacency surrounding that area is haunting, and it's so recent, too.